Samuel, I want to start off with the Energy Regulatory Commission put out fuel prices yesterday, a marginal increase of about 2.5 shillings. How does this impact shares of listed oil marketers like Kenyan, Kobil and Total?
Well, not directly, in as much as whenever the fuel prices go up, it really just hits the consumer. They are still, paying as much for landing costs. So it's just a shift rather, and they have been complaining that the fact that the prices are regulated does not allow them to actually make the sort of margins they would like to. So I believe that it does not directly benefit them when the regulatory commission makes the adjustments rather than allowing the free market to do so. But then again, we have seen or we have had complaints that the petroleum distributors, would have huge, there was an upward stickiness downward stickiness to prices whenever they raise their prices, and that is why the Energy Regulatory Committee actually stepped in. So it's a really difficult call to make.
The other element of this is that if this does continue, this is the second month fuel prices in Kenya are rising, then there's a likelihood that there may be higher inflation fears.
Well, the increases were marginal, so I don't think that we are going to see it hit inflation that seriously. I would be more worried about maybe the flood situation, which might push away or push forward the planting season and in effect cause us to have a shortage or a slight shortage of food in the next maybe 2 or 3 the next harvesting season. And I think that would be more worrying than the fact that fuel prices have gone up marginally right now. I also think that we should be seeing fuel prices coming down next month. We have continued to see inflation levels actually going down, even with the fact that fuel prices went up last month. So I think that that was not a very big rise and will not necessarily be affect inflation or hit inflation as hard as most people have touted it.
Samuel, one aspect of inflation and even the fuel price we're talking about is obviously the Kenya shilling, which today is the lowest level since January 30 at around 83.90 this morning. Do you think this is likely to get sustained? The psychological level is normally around 80, but we've not been there in recent months.
Well, we are actually expecting to start seeing, it does not make sense to have, if we do get to single digits levels of inflation, to continue having such a high CBR rate, and therefore we do expect to start seeing interest rates coming down in June. We expect that the Central Bank Monetary Policy Committee is going to start, albeit gradually, bringing down interest rates. I think the target is around 80 shillings, and I think that would be a good area. We have already seen the shilling stabilize pretty much, and we are starting to see a lot of foreign direct investment, especially now that we have the news that Kenya has had an oil find, and that is good for the economy. We should actually, and we have even seen that actually falling through to the market. We have actually seen the markets beginning to get very positive and very bullish over the last few weeks, which I think all garner well for the Kenyan economy.
We're also expecting the economic survey out this morning from the good people at the Planning Ministry and the Bureau of Statistics. What are your expectations on the preview for the Kenya's economic survey?
Well, I'm thinking about 5% economic growth. Of course, we might have had a bit of a slowdown considering that we have had high interest rates, which will have hit on the investment levels because borrowing definitely slowed down. But we did not see such a huge slowdown in borrowing, although I think that the real estate sector may have been the hardest hit in this case. So I think we might see a slowdown on that end. But going forward, I think if we do have expectations of interest rates going down, then we can also expect that we're going to see a surge in investment levels, or rather a surge in borrowing levels. The banking sector and the financial sector has actually done very well and continues to do so. We did see a bit of a slowdown in first quarter results that have been released so far, but I do think that that was just marginal, and I think that the fact that they accepted to restructure their debt payments, their loan payments, was actually one of the major moves that might have helped to actually cushion them from any major bad loans that could have come from high interest rates. And
finally, very quickly, what are your expectations for the Nairobi Securities Exchange today? Is it still a lot of foreign participation or what?
Well, we're entering into a window which we are seeing a lot of rights issues, and we expect the NIC, we expect the Diamond Trust, we expect some listings on the market. So I think the market is going to be quite strong in the next, in the short to medium term. And I believe that before we do see political risk begin to affect the market, we are going to see the rally continue.